fixed capital account and current account. And here we have to be very careful. Most of the times in partnership, you will be asked to prepare capital account and current account together, or you will be asked to prepare only current account. That's why we are given fluctuating capital account, and then we have a fixed capital account. So if you are asked to prepare fluctuating account, so that means you are going to prepare current account and capital account on the same side. So the same side you prepare it. But when you are asked to prepare fixed capital account and current account, that means you prepare capital account separately and you prepare current account separately. But if it is fluctuating, that means you prepare them together. But you must be very careful when you are given the question. You will know in the question whether you must prepare fluctuating or you prepare fixed capital and current account at the end of the day. Now, what are the format? The format of capital account is this is the format of capital account. Don't forget we have a debit side and the credit side. Then capital of the current account. Capital of the current account. You will see when we get our operation account, you see that those items on the credit side is directed to the credit side of the account. See here, you see current balance. This balance BD represents the balance capital at the end of the day, or maybe balance the current balance. It might be given in the question that current balance. It might be given in the question in the trial balance that after giving the capital account, you will also be given what we call current account. That means the balance they have in bank at the beginning of the year. That's what we call balance PL. Then after that, interest on capital is another income to your current account. So it's not something that is very hard. It's very simple. Interest on capital is money that comes into your account. So it also increases your current account. It will be added into your current account. Then interest on loan. That means there are some instances when you lend money to business, to partnership in form of loan. So you also have interest on that loan. So it is another one. It's also increase your current account. Then let's assume you have a salary. You are an active partner. You also receive salary at the end of the day. And don't forget share of profit at the end of the day. We also increase your current account credit side. That means it increases your money. So all these things are going to your personal current account. Then don't forget you might draw some amount from the business. You see that it will reduce your current account, because when you are paying drawing, you will also pay interest on drawing. Don't forget. So when you pay drawings out from the money that you withdraw from the company, it reduces your current account, and the balance, you have a balance current account that you have in bank. That current account is same thing as bank account. So it's same thing as a bank account. So the balance sheet will give you the bank account, the amount you have in bank at the end of the year. So that is that about the current account. We are still going to teach some topic, but let's quickly trash this illustration to back my explanation up. So to know how to prepare partnership account, appropriation, profit and loss at the end of the day. Now, illustration. 3 people are involved in a partner, which is Adeyoyi, Fumi, and Hanu. They are in partner, and the sharing profit yield ratio is 3:4:3:1, respectively. Now, their current account show credit balance of 5,000, 4,000, and 1,000 for Adeyoyi, Fumi, and Hanu, respectively. Now, the partnership agreement. You know, I told you the other time that partnership is also the same thing as a partner deed. Partnership deed. So they agree that interest at the rate of 5% per annum will be allowed on capital. That means the capital that is being given 5,000, 4,000, and 1,000, they will get interest of 5% on that capital. And when they also, while interest on drawing is 5% per annum, that means when they draw from the company, they will pay interest of 5% of the drawings that they did at the end of the day. Now, see, Anu should be credited with salary of 1,000 per annum and Funmi with 750 per annum. That means it shows here that they are active partner. So therefore they are entitled to salary, which is given here in the question. And they said profit before making adjustment for the year is amounted to 490. That means when having prepared the trading profit and loss account, the net profit at the end of the day, because that is very important, you must have the net profit. So the net profit is 4,950 naira. That is the net profit, and that is what we need. Even if you are told to prepare by trading profit and loss account, you must get, you know, when you prepare it, you get your net profit at the end of the day. That is the only net profit that we need, so as to help us in balancing our account. Then during the year, we draw, and don't forget they have 5% on drawing. So these are the amount that they withdraw: 1,000 for Funmi, 2,000, and Adeyomi withdraw 1,000, Funmi 2,000, and the Anu withdraw 900. Now, prepare profit and loss appropriation and show the division of profit and partner's current account. It is very simple. What we just do is that since we are given the net profit, we are not given trading and profit information here. So since we are familiar with trading profit and loss, the only thing we just need is a net profit. Then going back to the additional, to the format, you see that what we need is net profit, and it has been given in the question. So here we go and prepare the profit and loss. So let's go. Now let's prepare profit and loss appropriation. But before we prepare profit and loss appropriation, let's quickly do the workings. That is very important. Let's first do the workings of interest on capital. And you know, in the question, interest on capital is 5%. So interest, number one, interest on capital. So Adeyomi is 5/100. So what is the capital contributed by Adeyomi is 5,000 naira. So he will be entitled to capital, interest on capital of 250 naira. Then Funmi, %5 times, you contributed 4,000, so it's going with 200 naira. Then Anu also have 5% on 1,000 that he contributed as capital into the business. So we have 50 naira at the end of the day. So that is how we prepare interest on the capital. Then now the second one, we have interest on drawing, and we are told here that if you look at it, Adedoyin withdraw 1,000, and the interest on drawing is 5%. NGN. Then Funmi, that is 5% times 2,000. You withdrew 2,000, so he is paying 100 naira on the interest on drawing. Then Anu withdraw 900. So Anu will pay 45 naira for the interest on drawing. So that is the calculation. Now let's now go to the profit and loss appropriation. So Adeyomi partnership, Adeyomi, Funmi, and Anu partnership, appropriate profit and loss appropriation account. Don't forget debit side and credit side. Now here we go, net profit, and that is the only very paramount thing that we need, and that we given that the profit before making adjustment is there. It's also same thing as net profit. So our net profit is our net profit is 4950. Then after that, is a profit, so they want to share this profit to the partner, and then before we share it, the partners draw this amount and they are entitled to pay interest on drawing. So this is the interest on drawing. So that means interest on drawing also increase profit because they are paying it to the company, so it increase the profit at the end of the day. Are they doing is 50 naira. Fumi is 100 naira. Anu is 45 naira. That is 195 naira. So the amount that they will be sharing is 5145. But before we do that, let's see what will happen here. Do you have interest on capital? Yes, you have interest on capital. So that means company